I need liquidity pool party still in Neon. I have the rest.
Look at the updates to Alcor's.
I also still have a few unopened packs. I could rip a few more packs before I despair.
I did that last night. I opened all my extra packs, and my first pack was all 5 commons, and then my second pack was 4 commons and 1. I just like, God, RNG sucks.
Yeah, that is weak.
Okay,
Lance was
that
asking,
we're live in Discord.
what's going on, Mopaka? Lance was asking if we would migrate our liquidity back to Alcor now that they have the V2 or the V3 liquidity pools. And, I mean, I
I'm
like
not
that
opposed to
idea,
it.
but
I also feel like
it's
DeFi
also,
Box is not doing a whole lot for wax these days.
yeah, I agree. Plus, we can like makes the token easier to like buy. You get less slippage if the liquidity is more targeted. Like it'd make Neon cheaper to buy if you were buying it, even though this same amount of liquidity exists in the pool. Yeah.
I'm still posting that we're live in all the places. We're live to look at the new updates to Alcor Exchange liquidity pools.
The only thing is, I'm not sure that how the tool like Wapaka's tool that we've been using to distribute rewards would work. Because it wouldn't be based off of like a token, like the V2 liquidity model was. I think that's also a problem for if we moved our liquidity into Alcor.
Now I understand what you're saying.
If we'd be able to do that, yeah. It's also a problem on Wax DAO. I hit up Mike D just on Discord. I don't know if he uses it enough or much at all. I'm not sure if he saw my message, but any farm where people deposited liquidity pool tokens from Alcor onto DeFi or onto Wax DAO, you won't be able to withdraw those tokens now. They don't exist anymore. So that might be an issue. I wonder how that gets solved.
Yeah. I don't know. We'll figure something out.
Yeah. I mean, I hope. Part for me, it's also like I have probably like 6,000 wax worth of like Wojak wax liquidity that I staked to the farm there, but now I can't pull it out because there aren't Wojak wax, like the wax Wojak token that you used to get that you would stake to that pool. That token isn't like a thing anymore. So I wonder how I get my liquidity back. That's not like an insignificant amount of wax.
Wait, how does that work? So Alcor changed their pools, and now your liquidity is gone?
Well, the liquidity isn't gone. The liquidity is still in the
token
V3
that represents liquidity
pool.
is gone? How does that make sense?
The token, it's no longer represented by a token. It's represented by like a unique position of liquidity that has specific parameters. So if you had liquidity initially, like for example, you have wax neon token liquidity in your wallet on Alpha.
Yeah.
For neon, right? And initially you supplied that to the V2 contract, which means it was supplied for a range of 0 to infinity. And you got in exchange for that, you got like wax neon token in your wallet, which represented your like portion of the pool.
Yeah,
now
that all makes sense.
Yeah, and now that position was migrated to a V3 liquidity position, which is represented by like in Uniswap, for example, where they created this like whole V3 was invented there. It used to be represented by an NFT, but I think at Alcor it's just represented, within the wallet that owns the liquidity as a unique position. Your position, because it was migrated from the original, if you open it right now in your wallet, you'll see it is still supplying liquidity from 0 to infinity, but you could withdraw that position and then create a new position with different like ranges.
So why can't you withdraw yours? That's the part.
because there is no more token, like Wax Neon token doesn't exist anymore. The liquidity position that currently exists in your wallet in the V3 contract isn't represented by Wax Neon token anymore. It's just represented by your wallet's
So does that mean
unique.
anybody who didn't pull their liquidity can't pull their liquidity?
That
I
means
don't understand
anyone
why it
who
only.
owned, yeah, anyone who owned the liquidity position on Alcor V3 or on Alcor like before the recent upgrade, and used that liquidity position, like those tokens that you got that represent your liquidity in Alcor, to supply to another smart contract. Like let's say you were staking it at
Yeah, like Nefty.
I don't know, like Blvd or yeah, like all of that stuff you would
Does that mean our
is now
Nefty
like
stakes are fucked? How does that work?
Nefty's going through Taco, so those they still
But I
use
never
V2.
unstaked it from Alcor. Or
They when they migrated it, they like migrated it to a Wax Nefty Taco like V2 pool, so they're still using that. So you can still
okay.
withdraw from Nefty.
So
But
your R
if you
Planet
would,
minerals, like how does that work?
our Planet Minerals, if you had them in your wallet, everything that you had in your wallet is fine. The problem would arise if you had
Yeah,
the
I'm trying to
liquidity
think.
position in your wallet and then you
I think
staked that liquidity somewhere else.
Nefty's the only one, I think.
Yeah, so that's
For me,
like
at
if you went
least.
onto like if like there's lots of like pools on Wax DAO, for example, where people are asking you to stake liquidity for like their tokens. Like those pools, you almost certainly won't be able to withdraw from right now.
Good
I'm
thing our
not
pool
sure
was
how
an
that
NFT and not an
works.
FT. That worked out well for
Yeah,
us.
yeah, that would it's kind of weak. Also, there's like stuff like I guess Blvd, if Blvd is still running, Blvd was asking people to deposit their Alcor liquidity into Blvd, to like stake for more blue token or whatever. Like
It just
you
seemed kind of
wouldn't be
shitty
able
that
to
Alcor didn't give
withdraw that
projects
now.
notice they were doing that though. Like they basically
Yeah,
just completely obliterated a bunch of projects. Like all
yeah.
their
I'm not sure
liquidity.
how difficult it will be to like release that, but I know from like trying to withdraw my Wojak Wax stake, I can't. And I understand what the error is. The error is like, hey, this like we can't find the tokens that you're trying to withdraw. It's like, yeah, no shit, they don't fucking exist. Like they were migrated. Like so now, how do I get my, my liquidity back? Interesting thing because you can't anymore. You used to be able to make liquidity in one wallet and then just send that to a different wallet by just sending those tokens. You can't really do that right now with the way Alcor's new liquidity works. But we'll dive into it in a bit. I really like that. I'm like excited about it. But that's just something to be aware of. So if people have liquidity staked somewhere else, maybe reach out to the people who run those contracts and let them know they might need to like manually unbind that liquidity, or I don't know how that would work. I haven't figured it out yet. But like I said, I pinged Mike in Discord. I might have to ping him on Telegram, which I think he's more active in.
I think he's also still on like a cross country road trip right now. I don't know.
Yeah,
How
I'm not like
available
in a
he is.
hurry. I wasn't
I'll
gonna
see.
like
I don't know if he ever even looked at my message I sent him like weeks ago. Yeah, I sent him a message on April 11th, and he still hasn't looked at that in Telegram. So I wouldn't say Telegram is an easier way to contact him. Necessarily.
Okay, then I'll just. I mean, I've reached out, so he'll
I think
see
he's
it.
just unavailable right now. Like the man is living in a van driving around the country. Like I don't think he has access to internet and like his developer tools all the time.
Yeah, but it's gonna give him some stress when he gets back and sees all that messages.
I'm still waiting to hear back from our DAO thing. We're trying to get the sticker selection.
Yeah,
We
the
never figured
DAO
that
will
out.
be dope. One of
What's
these
going on,
days.
Eric? Eric says, "What's up,
What up?
guys?
What up? What up?
What up, guys?" We're doing some Alcor talk today. We're going to be talking about the new updates to Alcor liquidity providing liquidity pools. Right
And
now, we're looking at
the swap got a whole facelift too. Some awesome, cool stuff on Alcor today. Big changes.
I doubt this has anything to do with Wapaka, if I'm going to be honest. I'm the KY, he says. So Wapaka made them nervous with slick swapping and they jumped the gun. I assume they were working on this way before. Like, there's no way. Like, Wapaka's thing's so new. Like, I feel like they would have had to have started working on this before that. I feel like they're probably working on this for a while. I think it's more like, how many official communications have you heard from Alcor ever? Like, I've been on Wax for 2 years.
Yeah.
I have no idea who runs the project. I've never seen them on any streams. I've never seen them, like, announce anything. I don't even know if they have a Discord. Like, I'm not involved. Like, I don't know if they have a
Yeah.
community. I don't know if I'm in the wrong channels, but
NFTopia
like,
thing was like the first time I seen Alcor speaking at like a public wax event.
and that's Zuler. Zuler is speaking for them, and he's a Wax ambassador, and he worked with NFT Horizon. I want to say like that publication. So like, yeah, he
Yeah.
wasn't even always. I think he's like a recent addition to the Alcor team, and he's not also.
Yeah.
He's not the guy building Alcor. Like, that's a different
Also,
guy. He's just talking to that guy, and I think explaining stuff for that guy.
Wapaka's tool is not even like a competitor to what WAC like the routing on Alcor, because Alcor routing routes between Alcor liquidity pools. Wapaka's routing routes between Alcor, Taco, and DeFi box tools to give you the best pass. It's an aggregator versus an automated market maker. So
But I think it's more of just Alcor has never really been communicating with the community or a part of the community, and that's why the community had no idea this was happening. And some communities liquidities got screwed because I don't know. Also, how do you like realistically if you're running a DEX? Do you know how many tokens are on Alcor? There's like multiple
yeah.
hundred tokens. How are you going to contact the owners of all of those projects? Like, I don't know.
Yeah, I
It's a
do
tricky
like that they
situation.
migrated everything to the new liquidity contracts, because like in the past, like when I've seen, I mean, obviously this isn't the first DEX where like they've migrated the V2 to V3. Usually they run both in parallel. So like for example, that withdrawal of my Wojak stake wouldn't be a problem because that V2 is still a thing. There's also now a V3 pool, and then the router would, when I make a swap, it would look at both V2 and V3 liquidity and, give me my trade route according to where the best deal is, rather than, forcing everything to migrate on a contract kind of level, which is how that happened on Alcor. Which, I don't know, not terrible, but it definitely is it's going to be a problematic for people who have created third-party contracts that then also use Alcor V2 liquidity tokens. So yeah, like Liz said, I don't know, they don't really communicate, but that definitely would have been nice to have been communicated, to be like, hey, we're going to
Also,
be migrating our liquidity
I would
model.
like to fully disclose we're not in the announcement channels for Alcor, so they might have communicated this, and we were not there to hear the communications. As far as like, I didn't hear it communicated, but I'm not following them on Twitter. I'm not in their Telegram. I'm not in their Discord. Like, where would I hear about it? So I'm not going to say they didn't announce it. Somebody that's like following Alcor could tell you that better than me. But for me, it seemed like it came out of nowhere.
Yeah, same. And yeah, Alcor, when you do the like the trade routing on the Alcor swap, it looks at only Alcor's pools. So it's not looking at like Taco Swap or DeFi Box liquidity. Wapaka's tool is. That's like the main difference there. So, they are kind of similar. They're both trade routers. It's just that Wapaka's is a trade router and DEX aggregator, whereas, Alcor's is just a trade router.
Also, if you think about it logically, how does Alcor make money? Through swap fees. Why would Alcor swap your swap through DeFi Box and give them the fees? That's what, like, if Alcor did what Paka's tool is doing, it's giving money to other marketplaces. So, like, that's not in their best interest. So, yes, they're only using their pools because that's how they make their money. So, they're not going to, like, send your money to other dexes. That's bad for them.
Yeah. I'm pretty stoked to, like, look at what the new stuff is. Should we dive in already? Just, like, straight up. We've already been talking about Alcor. Might as well. Right?
Real quick, since we're on this page, I just want to show off.
Yeah, that's it.
Our Nifty Blocks sale. If you go to our most recent drop, which is no longer recent nor a drop, it has ended. Blockchain Boulevard is retired. So you can no longer buy these packs. And they also don't really exist on the aftermarket, to be honest. Like, they're rare as shit. I should have bought more of these. There's only 2 of them on the aftermarket.
I was kind of slacking on that too. I still have a few. I bought like 8 or 9 like over the last few weeks.
Nice Mint 369. That's a good one. 5,000 wax. So there's only 3 packs available on the aftermarket total now.
Yeah, the packs won't be for sale again, and they probably won't all be ripped open or burned right away, at least, because if we did that, then anyone who's holding on to packs to try to open their packs in the future would kind of be boned with, being stuck with like a really small RNG pool. if we were to open all these packs. But for now, those packs are just kind of like not for sale and also not going to be like
I mean, if anything, I feel like we can take the packs out and burn them. Like, we don't have to pull everything out of the pools, but we could burn all the packs just so that's more of an accurate representation.
Yeah.
And then those cards will just exist in the ether without no able to pull them out. I think that's probably the most like realistic way to do that. Because I don't know. I feel like there shouldn't even be an option for those packs to be somehow at a later date pulled out. But anyway, sets. We got our set book. If you go on Atomic Hub, there's 4 different sets, 4 rarities. You can see I have 1 lit set and 1 dim set. I'm so close to my glow set. I need to click farm still. Neon, I'm not even close. I don't think I'm getting a neon on this guy. These are already spoken for too. Somebody in our Discord wants to trade.
Sets. 1 lit.
But these set books are accurate, so if anybody's on Atomic Hub and they want to see if they have sets, you can just look in the set book. There are 12 artworks for each rarity. You can complete multiple sets per rarity this time. In the past, we've only done 1 set per rarity. Well, that means if you have 24, 2 of each of the commons, you can get 2 of the Chroneonbergs. So you do have the opportunity to collect multiple sets. Which
I'm just missing play to earn for my glow set. I got a couple of dupes. I'm gonna have to make some trades here.
All right, but that's all I really wanted to announce today because that's Neon Space news. Is that sale's no longer open and you now have like 30 days to figure out your sets. Because on June 1st we'll do the set bonuses, the Chroneonberg, or at least the snapshot. But hopefully we should have the artwork done by then as well. And then also, we'll probably do another auction. We normally do auctions after our sales end for charity. We do charity auctions for the rarest card in the entire set. We do a Supernova. So we haven't made it yet, but Max and I can work on that in the next week or so. And then maybe next week we'll do the auction for the Supernova. And that would honestly be a really cool use case for our Neon token, is to let people vote for what charity we do. That would be kind of cool.
Oh, yeah.
But our DAO is not working, so... Do you seriously have 19 dim sets, Sam the KY? You're fucking savage over there.
Dude. I have 2. 2, and I'm missing 1 to complete a 3rd. So
and also...
You got me licked.
Not financial advice, but if you don't want fucking 19 set bonuses, that's like 9 neon. You can just burn your set bonuses into neon and then use it to buy new artwork, so... Which is another reason why I'm kind of scared to do unlimited set bonuses in the past, why we haven't done like unlimited common set bonuses, because it just, generates a shit ton of new neon if you're just shitting out new cards.
That's true, but I do feel like people who collected them, I feel like, I don't know.
You paid for it. You went through the effort to collect all that stuff, so, for now we'll do it.
It's so easy to multi-account it. Like, why not, like, just don't force people to fucking multi-account.
Yeah, also, like, if the Neon token dumps super badly because of this, the next time we won't do it. Like, I don't know. Like, I don't think it's going to affect the market so badly that'll ruin it. But, like, this is how we do everything. We do it, and then we adjust based on the results. But we don't know the results until we try it. So it didn't do anything for Burn Street. Like, Burn Street, we did the same thing. And nobody really completed that many sets, to be honest. Like, because we had been doing no multiple set bonuses for so long, nobody's even trying to collect multiple set bonuses for Burn Street. So that one, like, only a couple people even got more than 1 set bonus.
I barely got
throw your screen up, Max.
That one's fucking hard. Yeah. What's that? Let me share my screen. It's probably gonna go Infinity Mirror because that was too slow.
That's fine.
But let's jump over to what's new here on Alcor, because I'd love to dive into this just straight away this week. Or I guess we'll start with market stuff just because to keep it format wise, keep it consistent. Let's start looking at the crypto market for the week here. We always like to check in on it's Tuesday. Today the FOMC meeting is happening. Tomorrow the press conference. The meeting goes today and tomorrow, and tomorrow's the press conference where we'll hear what the Federal Reserve is doing for interest rates. I'm guessing we're going to see a 0.25% increase Probably a little bit of like a pullback in some of these assets. But let's see how the market looks right now. This is Ethereum. We're looking at the weekly market, still, kind of falling off here, cooling off rather, I would say, from being overbought back. Kind of, if it gets oversold, we're looking for the market to kind of swing around. But we got some room to kind of like move down, and plenty of room to kind of make it back down to the like band here. I'm looking on the weekly for it to like push down, retest this band, and then hopefully bounce to continue our uptrend and continue confirming a bull market reversal. We're still, we've been kind of singing the bear market tune for months and months and months, and we're still not like convinced, or I'm still not convinced we've seen the end of this bear market. That would be much more convincing, if we bounced on like this kind of middle line and kept moving up. Now let's move a little closer to the daily to find out what we think will happen in the coming week. So we are still looking a little more bearish here on the daily, starting to flip red here on the band as well. But we're also on the overbought, or I'm sorry, oversold side of the RSI, and you can see the unbalanced volume is still climbing, but it's not climbing as like it initially climbed quite aggressively and then fell off during the sell here. And then as we've climbed back, we've made higher highs on the spot price, but we haven't really made higher highs or even the same highs we had before on the on the unbalanced volume to match the spot price kind of like trajectory. Generally speaking, that is relatively bearish. And so that sentiment of what the unbalanced volume is showing me, plus the kind of daily chart still, closing below bands day after day, still flipping red now. I'm thinking maybe we come retest in the coming days around 1950. I'm assuming get rejected and kind of move down a little bit further, and then again like move down potentially to this level here. So like 1950 is where we're looking to be rejected to move all the way down to potentially retest 1550, more likely like 1600 or 1650 if we're going to be bouncing. But I think we have some range to like move within those prices, and then let's move really quick back to the daily and look at the like range lines we've been drawing out. It's kind of fun to see this too. We have been hugging this orange line, so we drew these lines, like 2 months ago now or something, thinking that the thinking with the coloring is here, the green, orange, red, this making up kind of like one range that we're tracking, and then the green, orange, red being the other range. We had been in this other range for quite a while here. When we fell into it here, kind of hovered around there, retested the top, failed to find support where we used to find it, and then this was the bottom of that range, and then we were bouncing around until we got back up here, then between the two ranges for a while, and now we've been trading within this top range. We're right at the center, and again, like I said, I'm kind of expecting to see this center probably not hold, and then us moving back down, and then retesting. I was saying a second ago 1550 or 1600, and so that would be 1550 was kind of the top of this range, and 16 is here, or 17 is here. So maybe testing the bottom of this range is most realistic in the coming days. So I think maybe we move down. Again, that's informed not just by the way the chart's looking, but also by the fact that we have a pretty big week of earning calls. Last week's earnings were kind of mixed. Also a big week. You had like Microsoft, we had like Google, big companies reporting. And then again, tomorrow, FOMC meeting generally helps to pick a direction for the market. And like we've been seeing, the CPI reports have been showing inflation is still increasing, although it's increasing at a slower rate, which a lot of the times in the news has been reported as like, inflation is slowing. And while that is correct, the way that it's worded, it sounds like inflation is decreasing, and that's not what's happening. It's just increasing at a slower rate as before. So inflation is still climbing, And obviously, I think the appropriate response from the Federal Reserve is to raise interest rates. Raising interest rates, rising interest rates tend to push down equity prices. So I'm expecting to see, the FOMC fallout basically moving down. Here's kind of like where we saw the CPI report, by the way. Like this drop was when we saw that the inflation rates were, you know, still climbing, not great, and then like the market immediately rebound. Everyone's kind of like too euphoric about it, I would say, and that's also why I'm seeing, I think, not new higher highs, not new increases on the on balance volume, despite the kind of euphoric price action over the last couple weeks. So, or even months, I guess, since each one of these is a day. It's probably a month. But here we're gonna get our clarity, I guess, from Jerome Powell tomorrow from the FOMC meeting, and I do believe that is going to be an increase in the interest rates, which is going to, tighten kind of like traders' sentiment, I guess, and drive the prices down a little bit. So let's see what happens. But I want to see a retest of like 1600 for Ethereum, and I want to see 1600 to 1500 kind of hold and start to form a floor to move up from, to start getting a little bit more confidence in the market rebounding and turning into a bull market. If we don't hold those levels and start to fall, then I do believe we'll see the market continue down its bear trend in the future. So now, using all that, keeping that in mind, we can jump into our 100 wax investment. But first, let's see what's new on wax and how we can use that stuff to our advantage with our 100 wax play. And this week, Alcor had a pretty huge update to its interface, to its swap interface specifically. So here I am on the Alcor market. I'll just sign into our DeFi wallet so we can do all of this with our communal position. But the Alcor market has been, for pretty much as long as we've ever used it, and every other market on Wax also, has been modeled after Uniswap's V2 liquidity model, which is a liquidity pool model in which two token assets are supplied in equal parts, 50-50 on either side of a pool, and then the liquidity of all of those tokens supplied to the pool are made available to traders for a price range between 0 and infinity. That is how V2 liquidity works, and that's what we're used to using on Alcor and anywhere else, like on Taco Swap or all that stuff. So to jump, I guess, quickly here on Taco Swap, I can show you what I mean by that. Here's like a liquidity position. You can see, 3,000 wax on this side, 1,300 honey on the other side. Those are equivalent in value. They're both worth the same. So 1,320 honey is worth 3,000 wax. And there is now an unlimited range that this liquidity is supplied for. This is a V2 liquidity pool. Now, let's see what's new on Alcor. So first things first, the swap. The upgrades to the swap. If you don't supply liquidity to Alcor, all you do is come here to swap and trade. You're going to notice some improvements as well. So the first thing is that they now have multi-token routing. So what you can do here is, for example, I can trade my Neon tokens. Let's do Neon, and I can trade, Wax into Neon, and that's kind of like, that has always been possible on Alcor. But what I can do now is I can trade tokens like LFG into Neon. And the way that works is down here on the multi-route, you can see the path that it's taking. So by default, it's actually set to 2 hops here. So I've actually changed that already. So let me change it back. But so by default, if you came here and you, for example, tried to use LFG token to buy some Neon, it would, make a path LFG token into Wax, and then Wax into Wax Neon. But up here, you can change your max hops and let the market actually jump through up to 3 different pools, which you can see it hasn't actually added another pool, but now it could. Okay, here, now it has actually. So there is a pool for Brawl Neon, which I think Wapaka and I actually have supplied some liquidity to. But now we're actually able to get a better deal for this trade by routing, instead of just the 3 pools, now we're doing all 3 hops here. So we're going first LFG into Wax, Wax into Brawl, then Brawl into Neon. So this
Trap
trade
Young is
routing,
asking, why would you want it to jump around?
the trade routing makes it possible to trade assets that don't have direct pairs. So because there is no liquidity pool for LFG into Neon directly, this trade would just not have been possible in the previous iteration of the swap on Alcor. So the reason why the trade routing is nice is because it will, find me a way for it to make the trade possible through a single transaction. I wouldn't have to go LFG into Wax manually and then Wax into Neon manually to make the trade happen. And then you'd want it to jump into more than the default 2 hops, because there is different routes that it can take that maybe require multiple jumps but produce a better deal. And that's what we're seeing here. For example, you can see here I'm only making 0.0005 Neon with the default route that it gave me. But if I just add this additional jump, let's see. Is it maybe the Brawl token price changed in the minute I was doing this? Oh, but there, okay, there it is. That didn't make sense. So it should, what? Let's say 57. There you go. So now I'm actually getting 0.0001 more. You can see it was a second ago anyway. But the reason for that is because there's a better route, because the deal that you get from moving into one asset into the other is producing a better return than if you just did the trade straight. And now you can do this from any other token. I don't have to use LFG. I can use USDC or something. Although USDC into Neon, I think there already exists a liquidity pool directly for that. Yeah, so there's only one pool for this. But if I did USDC into Egg, now there is not a pool necessarily for this trade that already exists. But I can still make the trade with one transaction. And look at what's happening. It's actually going USDC into Neon, Neon into Wax, Wax into Egg. But if you had set here, oh, by the way, let's take a look with the benefit for the jumps now. So because it's using USDC into Neon and then Neon into Wax and then Wax into Egg, it's ending $1 USDC is getting me 1,273 Egg token. But if I limit the jumps to 2, it'll still find a path. See? So now it's doing USDC into Wax and then Wax straight into Egg. And my end result is 1,272.055. So let's see, what was the difference here when I allow for another one. So here I'm actually getting like 1.3 or something more Egg tokens, because this is a better deal, because apparently moving USDC into Neon before is a better deal than moving USDC into Wax directly. So there might even be, if you went USD to Wax, it might even yeah, look at this. Even though there is a USDC Wax pool, the routing is going to get me a better deal because I'm letting it find me a better path. And there's actually a better deal to move through USDC Neon and then Neon Wax versus just jumping USDC Wax straight through the pool. So the biggest thing to take away is we're seeing, oh, and also, by the way, when you first launch this is what it looks like. There's a little button up here you can click to bring up a graph. All the graph data has been reset till the recent relaunch of this, so it's all the information is kind of like brand new, and you're not going to be able to go back very far on these pairs. But the new interface for people swapping on Alcor is kind of great. And I think the main thing that I would take away from this, if you're just using it as a brand new user, first time using the interface on this wallet, click the little settings icon here and increase the max hops to 3. Um, there's pretty much no reason not to, in my opinion. I don't know why it defaulted to 2 when I started this, because it won't do 3 jumps if it's a better deal to just do 2. Uh, so yeah, kind of cool, really fun. Like update, really easy to use. You don't really have to know anything about what's happening behind the scenes to use this, and you're actually getting a pretty good experience as far as your price impact now is being affected by the way the liquidity pools work. So, for example, if I take 100 wax,
Thank you for the raid, NFT Gamer TV. Shout out to T Davis. I'm sure the taco team was on. Shout out to Plax and our taco friends. We are looking at the new Alcor liquidity pools because Alcor just upgraded their contracts to V2 liquidity. That's what it's called, right?
V3.
V3. What was V2? Is that what we were using before?
V2 is what we were using before. Yeah.
What was V1?
V1 was like the original deployment of Uniswap's liquidity pool contracts.
V1 was like the bartering system back in the dark ages.
Yeah, it's like you create a thing and then you have to share like the order ID and stuff. It was terrible, but it's great. It's definitely the OG. But V3 is like kind of become the meta of DeFi.
Just to catch people up, though, basically it routes it through multiple pools. So if you're trying to trade one token for another token and it's cheaper to trade, I don't know, I guess you should just say the example. It makes more sense to me.
Yeah, I'll show an example again here really quick. So the main thing that you'll notice as the interface has been upgraded on Alcor, as someone who just comes here and uses Alcor to swap tokens and maybe doesn't participate in yield farming or anything like that, what you'll notice is that now you can trade any token for any other token. So for example, we were doing like let me do like neon into wax, because that is something that exists a pool. Neon, I wonder if it'll route straight through the neon pool or if it'll route through the USDC pool. So I'm doing one neon into wax, and then you can see here I'll push, okay, and it's moving neon into wax just through the neon wax pool, which exists, but there is not a pool.
Yes, so it's like wax on edge is what Chris says. And yes, it's like wax on edge, but only within Alcor's pools. It will not route you through Taco, and it will not route you through DeFi Box. So this is just for multi-routing within Alcor. It doesn't do multiple exchanges. So wax on edge is still a useful tool because it will potentially route you through these pools or other pools.
An even better deal. That said, though, I think wax on edge, since these pools have been updated, I think the Alcor pools are not seen by the wax on edge tool at the moment. So right now it's aggregating between DeFi Box and Taco Swap, and I think the V3 liquidity structure.
Wapaka's in here. He can probably shine a light on how that works.
Yeah, Wapaka, correct me if I'm wrong, but I do think that the wax on edge tool, there is a proposal on Wax Labs to implement
yep, I removed them. I aim to put them back later.
There we go.
Which, if you're not familiar, Wapaka in this chat here is the creator of Wax on Edge. So if you have any questions about Wax on Edge, you got the, the top dog. You got the top dog here, the big dog. He's the one who makes the decisions. So.
If you're unfamiliar with Wax on Edge, it's just waxonedge.app, and then you can come here and you can trade, any token for any other token here as well. And the way that this one works is it'll actually, oh, nice, you added the grass. Fuck yeah, dude. Like, let's say here I have a Novo token, and I want to trade Novo into Wax. I can say, do this trade. This is probably going to have deeper liquidity on Alcor, and this is a bad example, but you can see that it is going to route this trade for me. Even though it's all going on Taco Swap, it's doing, a portion of it straight through the Novo token Wax pool, and then another portion of it Novo into I'm not sure what this token is, but into this token, and then this token into Wax, and all of that in a single trade to get me a better deal than had I just used 100% this one pool. But if I used a token that has more liquidity on, Taco Swap, or not on Alcor rather. So let's say Wombat token. or I guess CMW is a good one because CMW works on or has incentivizes liquidity on both Taco and DeFi box. So this one is probably going to be a pretty great example.
TLM is also a good example because TLM has large liquidity on
That's
multiple exchanges. So if you're trying to trade like, like millions of like lots of TLM, then it'll definitely split it.
yeah. So like here, let's say if I'm just doing, oh, it's insufficient balance. Yeah, I do. Oh, oh wait. Oh yeah, here's the route. So you can see if I'm just doing like 100 CMW, it'll do it all on DeFi box because that's the best deal I'm getting. But if I was doing 10,000, it'll now split this transaction for me. And you can see, I like that you've added this, by the way, Wapaka. Dope. But yeah, you can see like it'll do that for you. And then in the future, Alcor will be part of this again. So the main difference between Wax on Edge and what Alcor Swap has done is that Alcor Swap is now going to route for you within Alcor's DEX environment. Wax on Edge, especially once they add Alcor back, will route trades for you across the entire DEX environment on Wax blockchain. So it will move, it'll give you the best route, not just on Alcor, but on all of the exchanges put together.
This is a good question. Chris asks, how does that affect the middle token's price? Like, if you're going in between two tokens, like what does the in between token do? Does like the price just immediately go up and then back down, or does it increase the price, or like whatever you're routing the trade through?
Yeah. So like for example, this token here where I'm buying let's do like USDC, right? USDC into egg. I want to buy $1 and the route it takes is going to be USDC into neon, neon into wax, wax into egg. And so what would happen here is I'm, buying neon tokens with USDC from this pool, meaning that the neon value in terms of USDC of this pool will be increasing slightly. Then I'm selling the neon token into the wax pool, making the neon value in terms of wax decrease slightly in this pool. And then I'm buying the egg token with wax, making the egg token remainder in this pool increase slightly. So each individual step along the way is going to be affecting the spot price of that token in real time. As that price goes up, so for example, now the price of neon token, is in this trade, the price of neon token is going up relative to USDC. There is a way for, US neon token is going down in terms of wax here. So if there exists an opportunity for somebody to buy neon tokens with wax from this pool and then buy USDC with that wax. So for example, if I swapped wax into USDC, look at this. There is a USDC wax pool. We just saw it there. But if I did this trade, trying to make it bring up the router. There it is. If we did this trade, not quite so big. Let's see. If I do like a smaller trade, it'll be a different path, I'm sure. So I guess this pool is still the best deal. But what would happen is if enough of that kind of routing happens, oh, here you go. Now you can see what I was trying to show. Now it does wax into neon. It's not updating the picture for some reason. But this is wax into neon. And then, actually, what is this? Let me make sure. Let me wait for these things to upload what the image is. I'm not sure what these pools are. Okay, there. Oh, into my. Oh, say okay. These are different pools. But yeah, here now you can see it's doing something. Instead of just going straight into this pool, it's actually doing an arbitrage for me. It's doing wax into Matera, and then weird. Like, look at this. Oh, this is cool. So what's happening here is it's doing wax into this Matera token and then immediately taking that Matera token and buying back into wax. But this pool for both of these tokens is a pool that charges 1% was transaction fee, like liquidity sourcing fee, whereas this pool is the same tokens but only charging 0.3%. So this is actually doing a straight up arbitrage for me, because wax, I could literally wax from here is right here. It's still wax. It's wax in and it's wax out right here, but more wax out than I put wax in. And then it takes that wax and turns it into USDC. So really fucking cool. But yeah, basically what's happening is those in between pools do change in value, but then like you can see in this example, that shift in value makes them viable candidates for other paths that maybe, you know, aren't necessarily people buying or selling Neon token or Matra token or whatever. Because like I don't know even what the hell this token is. I want to trade wax into USDC, but I am paying fees to the people who supply liquidity for these pools. So this whole like structure is kind of great for the liquidity suppliers and for the traders. As a trader, I'm getting a better deal for my swap, and as a provider, I'm getting liquidity volume, trade volume through my pool, because there exists these opportunities. And then again, I set this to 3 hops because I'd like it to find those opportunities.
Mono
Like
Suerte
right now-
asks, can you pick wax? Can you find a way for it to route wax into a better deal?
That would be really cool, but no, it won't let me do that. It won't let me
also,
put wax on both sides.
I want to quickly address Boulder Magic said, I tried to buy NFTV on Alcor Swap and it was really bad, and wax on Edge and Taco Swap was about the same. The automated market making and routing through multiple swaps will give you the best deal. That doesn't mean it's a good deal. Like if there is not enough liquidity to buy $1,000 worth of tokens, it'll give you the best deal for your $1,000, but you can still suffer massive slippage. Like if you try to buy $100 worth of USDC, even if you use wax on Edge, it'll route it through multiple whatevers, but you're still going to lose a ton of money in slippage. So like this stuff doesn't just automatically make the liquidity appear. The liquidity still needs to be there. This just finds the liquidity for you. If the liquidity does not exist, it can't just make the liquidity appear. So
yeah, like if I do 100 wax, I mean USDC wax USDC is a gnarly token because you get like a crazy arbitrage deal for this. Like here, look at this. 100 wax currently is worth $6.50. I'm getting what it says is worth $6.37, but I'm actually getting like $8 worth of USDC. So I'm trading up my wax big time if I make a swap like that. But the reason
for that
is
USDC into wax, though.
Yeah, exactly. The reason is because there is not this amount would not get me that because there is not the liquidity in the other direction.
That's honestly not as bad as it's been in the past, though.
It's not, and I actually added a bunch of liquidity.
Like only losing 6 cents on a $7 trade is
for
USDC on wax, not horrible.
Yeah,
it's a pretty large percentage otherwise, but.
And so that's kind of a great segue into why is it better? Why are we able to see a better deal for these tokens, even though there isn't like an ass load more liquidity suddenly here? And the reason is because the liquidity that is there is now targeted much, much more accurately to what the real trading prices are. And it is no longer 0 to infinity. So let's dive into that and do something with that for our existing 100 wax position. So every week on Tuesdays, we like to jump into DeFi positions on wax and participate in them to, try to grow our wax stack a little bit. I'm going to start this week by jumping over to DeFi Box where we keep our hedge. And we've been maintaining a position here. Initially, we started with 100 wax. And for a while, we actually put 100 wax into the USDT wax pool on DeFi Box as a hedge. And our thinking process or thought process for that was that as USD T, or as wax rather, goes down in price, like we looked at the chart earlier and we're like, we maybe think that the price is going down this week or the coming months, or at least retesting those levels. What we will expect for that pool is that as wax falls in value, the USDT will be used to buy more wax to maintain the pool's one-to-one dynamic. So let's jump over here. Last week
I'd
we
like
had,
to
I think,
quickly interject. This is not financial advice. We always say this is not financial advice. This is supposed to be an educational platform. We'd like to show you opportunities there are on Wax. We are not encouraging you to participate in the same opportunities as us. If you'd like to, that's up to you. If you think it's a good decision. Same with like max reading charts. Like just because it looks like the charts are going up or down, we do not have a crystal ball. We cannot predict the future.
Yeah.
So please do not bet your rent money on the stream. We're strangers on the internet. But I would just like to make that clear in case we have some new viewers that like we're not telling you to follow us, but like we're just showing you what's out there if you do want to participate in this stuff.
Yes, exactly. So it's not about like trying to bet the farm on this stuff. It's about understanding how to participate in this stuff and how it works. And I'm really excited about today's topic because I really love liquidity supplying and V3. Like I said, V3 liquidity farms are the meta when it comes to yield farming and supplying liquidity. So here we have our liquidity position on DeFi Box. It's worth 53 wax. So it's been hovering around 53 wax. That's kind of like, what we expected. We started with, I think, 50. So it's up 3 wax, I guess. And that happened because, the price of wax had fallen a little bit since it was worth 50. But now let's take a look. If I go to swap and I click on liquidity, I can see my position here. And you can see, we started with just 13 wax and $2.7. 274. Now we have 28 wax, so it's working. It's gone up, but we've sold some of the dollars. That's exactly what we thought would happen. As the price of wax has fallen, we've spent dollars to buy wax to keep this ratio 1-to-1. Even though there's only 13 wax in this side, this 13 wax was worth $2.74 at the time that this liquidity pool was made. Now there's a lot more wax, but that wax is worth this amount of money. So in terms of dollars, we've actually lost money here in the decay of the value of wax, since now the total position, is worth 2 times this, which is what, like this 180. So what is that? 360, right? And we started with, this is 270. So we started with like 550. So it's definitely down in terms of dollars, but again, we were interested in wax, and it did its job as it has increased our wax as the price of the wax fell. So we can do a better job of doing a similar hedge using V3 liquidity. So I think it's time for us to pull this hedge. And
I think it's also a good time to say to new viewers that like having goals in this stuff is what we always tell you. Like having an end outcome of what you want is important, because our end outcome is we want more wax. We're not trying to increase our US dollar position in wax. We're trying to increase wax. So like even though we lost money technically in the dollars, our goal was not to go up in dollars. Our goal was to go up in wax. So goal accomplished. But like having those goals is important, so you're not just like reacting to random numbers going around. Like, but yeah, it's like important to have.
We check on the position every week, and we would be able to then adjust the course to serve our goal. And because our stated goal was we want to increase from 100 wax to more wax, not more dollar value, the position was, increasing its wax value, and it was doing its job. And so we maintained this position this entire time. If our stated goal had been to increase the value of our USD in this position, we would have adjusted course.
And that's another argument for why you don't take financial advice from strangers, because you might be trying to increase your dollar value and we're trying to increase our wax value, and our interests might not align, and like everybody's situation in crypto is totally different. So like you really shouldn't be doing what strangers are doing, because you have no idea what their desired outcome is, and depending on what your desired outcome is, like you might end up doing the wrong thing.
Yes. Okay, so here's what I want to do now. So here I've gotten my money out of the liquidity pool. You can see I have, 26 wax and 26 wax worth of USDT. I want to use the USDT to act as a hedge against the potential falling value of wax. I don't need to be 1-to-1 even wax USDT to be mostly exposed to the upside of the USDT. Meaning this hedge, the idea here is I want my hedge to grow in the value in wax, or to grow its wax balance as wax loses value in terms of US dollars. So a better way to do that using the exact same amount of assets here is going to be to create asymmetrical liquidity rather than symmetrical liquidity, this being symmetrical, both numbers being equivalent, and doing that to participate in creating a hedge. So we can do that now using this V3 liquidity. Let's jump over here. I'm going to open up my trade here, and I want more wax USDT. So you can see here, I have 26 wax. I have 26 wax worth of USDT. I'm going to do another 16 of my 26 wax into USDT. So really quick, I'd like to see what the route is. It's showing me an older route. Yeah, there it goes. Okay, USDT. So it's just going straight through that single pool. Here for 16 wax, I'm getting $1.11 and 12 cents. I'm checking on Alcor first because I know Alcor pools are no longer part of Wax on Edge, but I also want to check Wax on Edge. So I'm going to make sure that I'm getting the best deal I can. So I'm also going to check over here and see if 16 wax gets me something more. We'll do USDT here as well. There it is. Oh, I'm chugging along a little bit here. We'll get there. Swap that down, and then 16 wax. $1.12.1, and that is getting me that by going through these two different pools. 112.1 versus 112.18. So this is a better price on the Alcor. I'm going to use Alcor right now. So we'll swap that, and now we've turned most of our hedge fund here. So we had we had it split 50-50. Now our split is 80-20. We have 10-ish wax left, and we have almost $3. Now that I've split myself 80-20, I'm going to create a liquidity pool for the same tokens we had earlier as our hedge, USDT and wax, but I'm going to do it using Alcor's new asymmetric liquidity, or V3 model. So the way I do that here is I'm going to come over to pool and say create new position. I'm going to select my token. I want to use USDT. And there it is. And now by default, this is the screen that it's coming up with. It's coming up because there already exists a pool, and here's how the liquidity in this pool exists. So this is kind of a nice visualization, actually, to explain the difference between what V2 and V3 liquidity is. So in the normal model of liquidity, the line here in the center is what the current price is, where the trading is happening, right? In the current, like in the iteration of liquidity pools that we are all very familiar with, stuff like on Taco Swap, everything that you're still seeing on DeFi Box, and everything that used to happen on Alcor up until before this week, it used to be this was the spot price, and then all of the liquidity would exist in like a bell-shaped curve that curved from 0 to infinity. So you'd have liquidity available, from here all the way up to infinity. Right now, this is limiting its liquidity range to, wherever the stopping point is. So we don't actually end up with any money or any, token values being supplied as liquidity for some price that will never ever happen. And so this is USDT and wax. So like it looks like the top end of the liquidity being supplied here currently stops around 21% over the current spot price. So what that means is that as people buy USDC or USDT from this pool, and the spot price climbs, less and less as people use USDT to buy wax from the pool, less and less wax is available to sell. eventually you won't be able to buy wax from this pool unless there's more people supplying liquidity beyond this price. And it looks like the liquidity on the other end is supplied all the way to zero. And I know that because this is mostly my liquidity. But so how can we use this to our advantage to do what we want? Well, what we want is a hedge for this position specifically. We want to have a position that, will grow in wax as wax falls in value. So what I'm going to do is I'm going to say I would like to basically I'd like it to supply liquidity for wax in terms here. So all the way to like 3.5 cents. I'm going to take a look really quick at our wax chart. Here's wax P. And we're looking at the daily chart for wax. And you can see, we're still kind of very much in the range on the lower end here. This is 8 cents is kind of like the top of the red line here. And then 4 or 5 cents was the bottom, but we've definitely dropped to like 4. If we're going to keep moving down, we'll probably move down to retest like 5 cents. And then, I don't know, maybe we push down to 4. Who knows? If we keep moving up, we'll probably, have to break through this resistance, which clearly, we can maybe move it up a bit. Right here is where it was like acting as resistance really well. But, it's clearly difficult to break. But it's hard to say that we'll move much beyond, 8.2 or whatever cents here. And we could definitely fall lower still, especially if what we think is going to happen in the crypto market this week continues to happen. So what I can do is I don't need to supply anything over 8.2 cents down here. And then I think we could fall all the way down to, let's say, maybe even like 3 cents flat. Now, when I supply my liquidity, my $2 here, I only need 9, almost my 10 wax. I don't need to put up a even position of liquidity because I'm so much heavier on the bottom side here. So I'm supplying much more US dollars and much less wax. And therefore, as the price of wax falls, I actually have a lot more exposure to my, upside in terms of wax than I would if I had supplied these in equal parts. I'm also saying that if wax does start to climb and we make it above 8 cents, once we're above 8 cents, I will have sold the amount of wax that I've supplied, and I will just be fully in USDT at that point. And then, I'll be fully in USDT until the price falls back down. Once I'm back in range, my USDT will start to sell off again. So I'm going to add liquidity.
Stomach Standing has a question here. He says, so it prevents the value from spiking above that point. So when NFT Hive Honey value shot up to 9 that time, that couldn't have happened in this system, question mark?
So it could still like push really hard like that high, but it would basically, if you've bought all of the counterpart of a liquidity, like the price just jumps like insanely aggressively. So it basically makes the price jump much more steeply the less liquidity that's left on the other side. And then again, once that liquidity is used, like once the price goes above that money that's trying to stay in that range will not be available. So no, you can't.
That also relies on people understanding how the system works.
It'll just fail basically if you try to buy like an insane amount, or it'll tell you like, hey, if you want to buy 1,000 wax worth of honey and there's only like 900 honey left on the sell side, it'll be like, you'll get 900 honey. That's it. Like that's what's available.
I'm saying if people put their liquidity this way, that matters. But if people don't do the min-max range, then it is the same thing as the old system. So like this system relies on the people providing liquidity to understand how it works in order for that to happen. And based on Wax's understanding of the liquidity, I would say most people are probably not using this correctly at the moment. So
yeah, so by default, if you just open any new position, like whatever this token, you can do infinite range right here. You click on that.
What's it by default?
By default, I forget what the default is. I think it's like 30/30 or something. Or it's wider than that. Hold on, let me. refresh and see what the default is.
So I'd say whatever the default is how much it can swing, like 50%.
It goes negative 50 and positive 100. So yeah, it's 50% in both directions is by default. And so if you wanted to do it like the old way, you could literally just click here, infinite, and it does an infinite. They also have a couple presets. So you have one where it's like, really tight. This
It
is
looks
only
like you can
5.
also just drag those bars, like the green and the red bar. You can just do whatever you
Yep.
want.
Yeah, you can drag the bars. You can use the plus and minuses down here as well. So lots of ways to like dial in your liquidity range. And then once you've set the liquidity, the other main difference between this type of liquidity and what we're used to with Alcor V2 or with everything else is that when people trade against these pools, the trading fees that are paid, like the 0.3% that we're charging for this pool, for example, see, we have it set to 0.3. That trading fee is no longer paid into the pool and made available for trading. It is paid into a fee pool and then can be claimed individually. So you come to your fees here and you can claim your fees manually. So this liquidity position isn't going to automatically compound the fees that are earned from trading happening against the pool into the pool itself. The fees that you earn from trading will always just basically pay into your claimable balance, and you can claim those whenever, but they'll stack indefinitely. So these fees in the old model, when you supplied liquidity, as the markets moved up and down, your value of your pool would increase over time, as far as like everything is compounding into that, and then everything that you've earned as far as fees automatically became available to the pool to act as liquidity. That's no longer the case. In V3 liquidity, you have your defined range, like amount of liquidity that you've exposed to the position, and then what you earn from that liquidity is a separate pool, and you can claim that separately as well. When you have,
Monasuerte says,
Mhm.
sorry to interrupt you. He says, is there a reason someone would want to set a limit on both ends? And yeah, absolutely. Like,
yes,
say I pair, I don't know, these numbers are all made up. Say I pair $100 with 600 wax, and say like I don't ever want to lose more than $50. Then I set my set limit at $50 on one side, and same thing where it's like I don't want to get that much more wax, so set like I can't get that much more wax or lose that much dollars. Basically, like it prevents it from like if wax goes to zero and you having 100% wax and $0 US dollars, like it prevents like these crazy swings that could just completely wreck your liquidity. So it's like the reason people don't use liquidities right now is because that can happen, crazy volatility. So like this is a much better system for users.
So to kind of like
Least common
address some of
standing has another question that's super easy to answer. If you drag the limits to infinity in both ways, that is exactly how the pool is used to operate.
Yep. So yeah, and you don't even need to drag it. You can click. There's a button that says,
But that's just the old system as far as like it used to
and
be
if you've
infinity
had
both ways. This new
liquidity-
system is the not infinity. Also, last
if
thing,
you already
Uga
had
said,
liquidity, here it is, infinity range there, boom. But if you had liquidity before, this is what the positions currently are.
Uga says
yeah,
slippage needs to be changed. Slippage is not decided by the marketplaces. Slippage is decided by the users providing liquidity. Slippage is because there is not enough liquidity on the market. So that's not like a marketplace decision. That's because not enough people are providing liquidity on the marketplace. So like that's not really a thing that can be changed by the market. That has to be changed by the users providing liquidity, the slippage.
Yes. So a quick thing to like address what you're saying though about why people would want to set ranges. There is, so setting a range, you will basically, if the price, for example, for our position here, right, if the price of wax climbs above the top of our range here, then 100% of our liquidity position will be in USDT. But if the price of wax, and then we'll just be in USDT, and we won't have any more wax, won't be exposed to further upside, which isn't, necessarily great. If the price just explodes, we'd want to probably be exposed to that. But if the price falls, below the bottom range. So if it falls below 3 cents, 100% of our USDT would be gone, and we would be 100% in wax. So this position would at that point be made all the way up out of wax. So you're not necessarily limiting how much of what you're supplying to the pool is potentially going to be exposed to, being turned into the other asset. But the reason why you'd want to set a range is because the way that you make money as a liquidity provider is from the transaction fees, from this thing here where we're going to claim our fees, right? So let's look at something that like is actually worth farming, like what is it called, TLM. So TLM puts up here let's look at volume. TLM is doing, what is this, like ass loads of volume. Look at that, right? That's a shit ton of trade volume, and that's in one day. That's a lot of price action moving back and forth. And you as a liquidity provider will get 0.3% of your position of the entire pool supplying that volume. Now let's look at the price of TLM here. Actually, let's do that on the markets tab, since we'll have a better idea. So TLM and wax. So you can see that the price of TLM, we're on the 4-hour chart. And since, how far back is this? All the way since like May, April, June, July. Like this is like a full year, right? For this whole year, the value of wax or of TLM has been between 0, let's say 0.2 wax, and on the upper level 0.3, 0.4, right? So let's say you and I or whoever is supplying liquidity, it's between 0.4 and 0.02. Most of the trading is happening here, if not all of it, right? And if I supplied liquidity to wax TLM, and I did that from 0 to infinity, lots of the value lots of the tokens that I supplied to the pool are just sitting there, never being used, not earning me anything. It's just, part of the pool. But if instead I use the V3 model and I now target my liquidity, and I say, I want to use wax TLM, and I want to supply liquidity for between, 0.0, 0.2 and what was the other one, 0.4, I can do that here, set my range much, much closer to what the current, like let's say, 30% or whatever in both directions, and then supply all of my liquidity here. And like you can actually see what's happening here. This huge spike, somebody's doing that. Somebody is putting, let's see, how close is that? That's 5%. Yeah. Somebody's putting massive amounts of liquidity, 5% in either direction of the current spot price. And that means everybody who's swapping this token, we have to swap through all of this person's liquidity before any of this liquidity becomes, active. And at that point, the people supplying this liquidity are earning the fees. So whoever is within this tiny little range is going to be earning shit tons of fees at the moment. And
5% means everything.
Yeah, it's a huge deal because you've
5% difference is astronomical.
Yeah, because you concentrated that much, meaning that now, sure, like, in your big pool, let's say you had 10,000 wax worth of liquidity supplied, and, the market was trading back and forth for a few weeks, maybe like, 3,000 or 4,000 wax worth of that liquidity was actually being traded against, while the other like 7,000 was just sitting, on the far end in the weeds effectively. If instead you took that 10,000 and supplied it, 5% on either end, now as the market moved, it fell 3% and then it climbed 6% and then it fell 4% and then it climbed 8%. You just sold all of your liquidity in one direction and then all of it bought back in the other direction. So you just did like 20,000 wax in volume against your 10,000 wax, just because of you targeting that liquidity, making it specific. the benefit of doing this to the trader is that because now look at all of this liquidity exists at the current spot price, it means that when I go to swap TLM for wax on just the swap market, I'm going to get a fucking incredible price. Like, let's see, $600. It's going to be like, it should
We have a
be
few
very
questions
little
I'd like to address real quick. Yuka's asking, is this Alcor? I've never seen this before. This is the brand new
Yes.
Alcor version 3 liquidity, which is what we're talking about on stream here today. We've been talking about it for about an hour now, so if you missed the first half of the stream, maybe watch the video on demand. We're not going to go over everything again. But yeah, that's what we've been showing off, is this is all brand new stuff that people don't know how to use, so we're trying to teach people. And I'm the KY asked, would you usually want to leave one side unbound so you could ride the good side of the wave? And that's like, there is no right way to do this. There's no wrong way to do this. It's, do you want to end up with 100% of one side, or like whatever percent of that side? So it's like, how much of that do you want? If you want the exposure all the way on one side, then sure. But like, yeah, I don't think that's like a one size fits all question. It depends on how much exposure you want.
Here's the other thing about V3 liquidity. We are used to, let me switch to like my yield farming wallet.
Also, am I dumb, but couldn't you not just do one side? Like, you couldn't say I have 100% gain on this side and only a 20% loss on this side, because the only way that works is if you're dumping one into the other, right? Does that make sense?
Say again?
Like, can you have a bigger swing on one side than the other? Because the liquidity pool, the way it works is 50-50%. So like, you can't get more than 50% of one without losing 50% of the other. So can you just say I want 100% on this side and 0% on this side? Because that wouldn't really be possible.
You can.
Right?
You absolutely can.
I guess, okay, that would be possible because the prices could change of other tokens. So I guess like, so you could actually screw yourself super hard if you did that.
Yeah. So let me show you. I'm going to sign into my yield farming wallet, and I can show you some examples of. So one big thing I think that is a major difference between supplying liquidity like this and supplying liquidity in the standard model is we are used to creating a like let's say I'm farming wax USDC, right? We're used to let's see, USDC. We're used to creating a pool position for this, and then if I wanted to add to that, I would add to the position I already have. That isn't necessary for this. So if you take a look here's some pools I have on this wallet. And then here, for example, this pool is wax USDC, and you can see look at that. I'm already up quite a bit on the wax side now, but there's 500 wax on the wax side of this, and 123. And so this is what this wide kind of chunk here. That's this pool position, right? And yeah, it's already earned. Like I opened this like yesterday. It's already like 0.27 here. Like it's earning me some fees. These fees I could claim right now if I want to, but I don't need to add more to this pool in this range. I also have a second position, wax USDC, same pool, but this one has a different range. So if you're supplying liquidity, like, and for this one, for example, I wanted to go more on this is very little on the one side, much more on the other side. So this is a very tight range. The idea for this position is I think wax is coming down short term. As wax drops, I'm going to, this position is going to turn more and more into wax. And then eventually I'll just pull the liquidity and I can open it again on the other side. Now,
you're kind of already saying it, but our most recent question is Wapaka saying, do you know some strategies? I was thinking of doing downrange and opening a position from the range under if price goes down. But you're sort of already talking about a strategy right now. But for an official transition, maybe here's some strategies that Max is working on.
This is exactly like, so I've been using this liquidity format for like the last 3 years or so already on Uniswap. And the main thing that you can do with this is you can effectively limit trade against a liquidity pool. And by that I mean, let's see, let's go back to our actual DeFi wallets, and let's claim some of the rewards that we earned from mining this week, and then let's do a like asymmetrical trade for next week. So we think, or I think, the price of wax is kind of coming down a little bit this week. I think the FOMC meeting tomorrow is going to show an increase in rate. I think we're going to see a bit of volatility, but ultimately I'm a bit bearish. So with that sentiment, let's jump over to Taco Swap. I'm going to jump into my, oh wait, no, I got to do a log out. Jump into our wallet here as well. So we've been farming a couple pools here. Let's just double check which pools we want to stay in for now, before we, or I guess not before we, first I'll claim the rewards. Let's do everything step by step. So another part of our yield farming is we have liquidity on Taco Swap. These are the pools we're currently in. I'm going to come up here and claim our rewards. So we earned a few tokens across the board here. And now I want to do a kind of like a trade move here. But I'll show you what I mean by that. But first, let's take really quick a look at the meal and take a look at how many days we have left in our positions. We won't be back for 7 days to check on this. So we'll run out of yield from this pool in the next 7 days. It's also down to 18% right now. So I'm going to pull liquidity from here. This isn't high enough to like let it run just for and miss out on 2 days. I think we can get a lot more yield from a different position. So for now, I think this one we should wind down. And then let's take a look. These are still good, and I really like both these tokens, so I'm going to leave those alone for now, but I'm going to remove liquidity here. And then let's just take a look really quick if there is another pool that we want to participate in, or if we'll just add this this value from that pool into our play that I was talking about a second ago. So I'm just going to go back to all really quick, and let's just take a quick look through what kind of incentivized pools exist right now on Taco Swap. There it goes. Oh, okay, an 800% ticket and wax. I'm not sure ticket is, but it got a long runway to pay these yields for. Hotwallet.gm doesn't sound like a project I'm familiar with that issued these ticket tokens. I'm not just going to ape into stuff because it's high yield. So let's look down if we see anything else that kind of is piquing our fancy. Otherwise, I'm okay with just using this to do a trade this week. 190 is not bad, but I'm not sure what stream is. I think let's just add this to our trade. I'm not seeing anything. We're down. Okay, here, 8 days with the taco rewards. We already have CMX tokens from our last position. This one might be. Let's just do it all as a trade. I'm going to swap out our rewards and swap everything we have right now into wax. And then I'm going to do the thing that I was talking about. So let's see. We're going to start by swapping. We got our Wombat rewards. We made 2.8 wax with that. Not bad. This is also 2.8 wax is great considering, again, we started this whole journey with 100 wax. The fact that now, you know, a 1 week worth of one position worth of rewards is 2.8. That's 2.8% of our starting capital in a week. So yeah, really fun. I don't know where we get this LFG token. It's almost not worth selling, so I'm just gonna let. Oh, we probably got that from when we staked our honey. But let's see. I'm gonna sell this one. That's 9.7 wax. So we're going to get a little bit of wax here, which is nice because we are winding down one of the liquidity pool positions. And we want to do that again so that we can create an asymmetric liquidity position that will act as basically a short-term, like, you know, bearish buy order for us. But we'll get, let's see what else we wanted to swap out. The NFTV was the other counterpart here. So I think that is everything that we farmed. Oh no, honey token. I almost forgot. Should also get some honey token. Where's that one? There it is. Honey tokens 0.7. Okay, not bad. All right. 1 second, just signing this last transaction. And there we go. Okay, cool. So we've now made 24 wax for this. All right, 25 wax total for winding down one of our pools and for cashing in all the rewards. Now I'm going to jump back over to Alcor Swap. I'm going to go to the swap tab. And again, I love the arbitrage opportunity I'm getting right now on USDC. SDC. So just really quick, 25 wax, that's $1.63. I'm getting $2. Like, that's great. And I can bridge this. Like, this is $2 of USDC. Like, this isn't some like weird fly-by-night shitcoin. So that's kind of great. Let me see how we do if we did USDT.
This is a little off topic, but Ugo wanted to know, do you know what has better rewards between the direct staking of honey at NFT Hive or the honey/wax taco LP?
The last time I checked, it was the LP, but I haven't checked super recently. But I do know that since they stopped doing the like wash trading, I imagine it's probably still the LP, but I'm not 100% sure. I checked by putting 10 honey tokens into a stake and letting it run for a week, and then did the math versus like a liquidity position the same size, and the liquidity position was significantly more. So I imagine it's probably still the same. But
it's
here's
also
what
a
I
hard
wanna
thing to
do.
calculate because it's based on volume on their aftermarket, which fluctuates. So like, it's a more like fixed amount in the LP because those rewards are fixed, whereas like it's not a fixed amount when you're doing the honey staking. So if somebody does a massive drop on NFT Hive one day, you might make way more tokens. So like, it's kind of hard to calculate as far as like that's not like a set number as far as what you're getting for the marketplace. So that number will fluctuate week to week.
Yeah. So here's what I want to do for this trade, and kind of shows off kind of like what we could do with these pools. So I'm going to do this trade 25 wax into $2 USDC. That's like, yes, I like that, especially considering I think the market might come down a little bit this coming week. And now that we have USDC and no honey at all, I'm going to go into the pool and I'm going to create a position in that liquidity pool for USDC, SDC. And in this pool, I want to start using my USDC to purchase honey. I'm going to just start by clicking 5.5 so that it drops me 5%. And then I'm just going to click these guys, bring this all the way down to below the current spot price. So right now it's 0.077 below the spot price. Here we go, 0.017. So almost at spot price. And then I'm going to say, instead of 5, let's give it like, we'll be back in a week. Let's give it like a 10%. So nothing crazy. 10% would see a price of 7.6 cents or something here. We can go down a little bit more. Maybe let's just go down to like 6.5. Here we can also type it in numerically. There we go. So now all I need is my wax, or my wax USDC. I don't need to put any wax into this position because I'm only on the side below where the current spot price is. So now when I add this liquidity pool, I only supplied my 2 wax, which again, remember we bought for 25 wax a minute ago, right? But now if the price of wax over the week falls below 6.5 cents, this position will be 100% wax. And we'll have bought that wax at an average cost on the way down between almost current spot price, between 0.17 lower than current spot, and 10%, or I guess we ended up with 19% below what that price is. So we're buying in on an average rate, below that price, but we don't actually have any wax. Another really cool use case for this is if you get airdropped tokens, or if you have video game tokens like Aether or RDAO or whatever token, and I want to support my favorite game by like supplying some liquidity, but I don't want to like keep buying tokens as the price of my stuff falls. Well, I could just be like, okay, I'll supply tokens at this range, but I'm not going to add any more wax. So you can still supply liquidity to a pool with just one of both assets. And now, as this position here, if I go back out, you can see now I have a position in wax USDT, and then we'll see the USDC position pop up here in a second. I'm just going to refresh so that it comes. Or did I not sign? Did I not sign the create liquidity thing? Maybe I need to do that. Let's see. Oh yeah, I still have my $2. So I need to.
Yeah, you're good. This new system is a lot like a limit or a stop order. It's like a limit or a stop order for a liquidity pool, basically. Which is if you do trading on like, other markets, non-decentralized markets that are not liquidity pools, you might be familiar with like limit or stop orders, and this is sort of like a limit and or stop order for your liquidity pool position.
Yeah, so you're basically able to define a range. Like here we go. I'm setting my limits for this range. Success. Oh, here it goes. Says
you're out of RAM.
Oh, okay. That's the issue. Well, I'll get some more RAM here. I guess so. These positions also, because they do, involve a lot more, seem to require some more RAM than just normal stuff. So I'd have to buy some RAM before I can make this position, which I guess I'll do. Right now just to show it off. If you ever run out of RAM, here's a way you can buy that more. So I don't have any wax right now. I'm going to use a little bit of my, let's see, what do I got here that I can turn into wax? I'll use some of my USDC. Why not?
Why don't you sell like the LFGK and all that random crap?
I just don't think it's worth enough.
You don't need that much RAM.
That's true. That's not worth enough.
That's not even worth like.
Oh, that's only 2 dim. Yeah, definitely not. LFG.
I feel like Xing could maybe be worth something. That's worth so little. I thought it was gonna be worth at least like 0.1 wax. There we go. There's 0.1 wax. That might get you enough RAM.
This one I can probably get a better deal.
Oh, Jolly just hooked you up with some RAM, according to Jolly.
Oh, okay, cool. Hey, thanks. Yeah, I was on DeFi 1.ftw, so thanks for that. That means that now we can do that. So I'm going to go back and try again. So what we did, just to reiterate, now that we know what we want to do, we want to create a position where we're using the USDC that we bought at a massive arbitrage too. We got $2 for 25 wax, so that's cool. But I want to use that USDC now to supply liquidity to the USDC wax pool, but I don't have any wax left, so I just want to use USDC to add to the pool and then hopefully buy wax as the price of USDC falls. So here we go. I've got this set. I'm going to do this really quick again by setting this to 5 on either side. I'm going to reduce the side that's above market price to below market price. And then, I'm not going to go as aggressive as I did the first time around. Let's just go 8% down. Let's see. I don't think it's going to get like a fucking nuclear drop here over the next week, and we'll be able to recheck in on our range next week and adjust it and see how it does. So let's see if I got some RAM now. Let's see, success and success. Yay, and there it is. So now you can see this position. Yeah, thanks for the RAM, by the way. I really appreciate that. This position is out of range, by the way. You can see. So you'll see on your liquidity positions which ones are in and which ones are out of range currently. And now the other cool thing about this is that if people want to use the swap to buy USDC with their wax, because I've added more USDC and no more wax, it actually creates even more, liquidity for USDC. So this pool is now able to facilitate trades for buying USDC with wax that the same liquidity depth of a pool that was set up for like V2 settings would never have been able to support. So you can see here, if I did like $64, that's 1,000 wax. Let's see, it's fetching the price here. And let me see. Yeah, I am set up like this. Oh, and then one last thing I wanted to talk about is, but here you can see, like, damn, this is, yeah, it's taking a pretty decent like impact hit, but like this is a lot less price impact than we would have gotten on a pool that, this pool only has like $100 worth of USDC in it. Like the fact that you can buy almost half of the USDC from this pool and take less than a 13% price impact is not bad. But now, we can do like something like 100 wax, and it actually does produce, very reasonable pricing, which is kind of cool. And let me check the multi-route here. Yeah, so here, very low slippage comparatively. Like the slippage is still not great, but it is really, really cool to see, the targeted, what is it called? Targeted liquidity, making it much more usable. So, for example,
Nostalgia has a question. He says, "Do you still get LP rewards even with a single token LP?"
Yes. So here I just made a single token LP. The rewards only come when the token's in range. And look at this; it just became in range. So I did create this LP
and
with
got
only
unclaimed
one.
fees.
And look at that. So I had initially only put $2 in here. Someone had used a swap, and my portion of that liquidity was used to supply that, trade. I got, a little bit. So I made 5.44 whatever wax for my 50 cents. And then I did get paid swap fees as well. You can claim the swap fees. It looks like actually it traded both ways here. But yeah, so there's quite a good reason to create very tight liquidity, is because like look how quickly I can earn fees here. I'm earning already 0.018 like wax, and you watched me create this pool like 5 minutes ago. That would never happen.
Question.
$2. Yes.
The Wicked asks, so if you knew Fate was going to dump against wax, you could have provided just Fate to the LP and gained wax as it went down, kind of like short selling ?
No, if you knew Fate was going to drop against wax, right? If you had supplied only Fate, like you see here, if I were to supply,
you wouldn't get any wax.
You wouldn't get any wax because if you're only supplying Fate, you're supplying Fate outside of the current spot price, and so I guess it makes more sense if I actually can look at the market so I can see the graph here. But Fate. So if
you have to work
had
the other way, like if you wanted to buy Fate, you could do it by only providing wax and buying Fate. But if people are trading, people have to be trading into the asset that you want. And if people are trading out of Fate and you don't want Fate, there's no way for you to capitalize on that.
Yeah. So see here, the white line is what the current price is. If you only supply Fate, you're only supplying at a lower price. If the price starts to go down, or I guess you're only supplying Fate at a basically a lower price in Fate for wax is what I meant by that. So if the price starts to, like, if the price of Fate in wax tanks, then this price would move away from your liquidity, and you would still have all of your liquidity outside of the range. The only way that you would make anything in wax is if the price of Fate pumped into your range, just like we just saw with my liquidity pool here for USDC, where I have some USDC in this pool. It was 100% out of range, and then as the price of as the price of wax recently fell in terms of USDC, my pool went into range, and now I've sold some of it. And again, if the price falls all the way to the bottom, I'll be 100%. I won't have any wax left, and it'll all be wax. I won't have any USDC left. It'll all be wax. And when it's all wax, it'll almost certainly be more than the 25 wax that I spent to buy this position in the first place.
I also think this is one of the most complex subjects we've tried to tackle on our stream. I don't think this is gonna click for everybody on the first one. We'll probably talk about this again next week, and if people have questions from this week they'd like to bring back, and then also maybe like Max from this week to next week, maybe you can like prepare a few strategies like that one you did with the USDC, where it's like these are potential ways you could use it. But we have been talking about this for about an hour and 20 minutes, so I'm afraid if we like, I don't know.
Yeah, it'll
keep
start
talking
going
about it,
in
might
one
start
ear
going
out
over
the
people's
other.
heads.
I guess
So-
the last thing I can talk about really quick, which just makes this really exciting, is that it really makes it possible for tokens that have similar value structures to be very, very functional. So like, I don't know if you guys paid attention much to stuff like what is currently being incentivized on Taco is the utility tokens for the game ZOS. And they've been incentivized for quite a while, and it's like Silver, then there's Wood, there's Z Wood, Z Stone, like all of these different tokens, right? And so there is deep liquidity in these pools, but that liquidity is going for this insanely infinite range. If instead wood is always worth the same as stone is always worth the same as whatever, you could create a liquidity pool that has all of the same amount of liquidity in it, but the range is only 10-20% in either direction, and then all of that liquidity becomes available within that 40% range, making trading between those assets like ridiculously less impacted by the available liquidity. It would effectively 1000x it'd be the same as increasing the liquidity depth of pools like this by a factor of 1,000.
That seems like something that project should consider doing.
Absolutely, they should. And another thing is, if there's stable coins like USDT and USDC on Wax, there's pools you could pool both USDC in one side, USDT in the other side. But why would you want to supply liquidity for an infinite range? Those tokens are both worth $1. So why not just be like, okay, I'll supply liquidity, but between 80 cents to $1.20, and now most of the time those tokens will be trading within that range, and so most of the time your liquidity will actually be earning you fees. Whereas if you're supplying it for the entire range, most of the time it's still trading that same small range, and most of the time a lot of your liquidity is just idle. So it's a great way to be much more capital efficient, and especially when it comes to project tokens like that, especially projects that have multiple currencies that all kind of can exist in close range. Like, you can create liquidity with very specific tight ranges and make those tokens a lot more functional for the secondary users. And the really nice part of all of that is the user doesn't need to know any of that shit. The user comes over to the swap tab, chooses the token they want to trade, and the swap handles everything. And it's really, really cool. This is a major update for DeFi on Wax, and it really brings liquidity providing on Alcor into the 21st century as far as what the current meta is on DeFi. This is the same process that is happening on Uniswap.
Closer to Ethereum, basically.
Yeah, this is what almost every pool out there right now, every DEX out there, is either in the process of or already of operating with this format of liquidity supplying, where the liquidity providers can specifically target a range. And like we saw, being able to do that has many utility reasons. Maybe you want to target a small range for a asset that isn't very volatile. Maybe you want to supply asymmetric liquidity so that you're only exposing yourself to one direction of a market. Maybe you want to supply entirely asymmetric liquidity because you want to create a limit order or something like that. And you can do all of this stuff with this new format now. The only thing is, if you are using it as a limit order, like let's say with my liquidity position here for the USDC that we just opened, if I want, if I was waiting for this to go below range and I wanted to use it to buy Wax, I need to come here and close and remove the liquidity once it is all the way in Wax. If I forget to do that and the price comes back up, then all of my Wax will sell back into USDC, and I'll be left with all USDC again, plus, of course, all the fees that I earned from doing this. So, by doing so, I can place limit orders, but I do need to, monitor them if I'm doing it to trade. in that way. But the really, really fun part about that is that now you can trade tokens that maybe don't have a spot market. Like Neon token, you cannot trade on the market tab. There is no place for you to set a limit order. But if you want, you can create a liquidity pool, wax Neon, and if you say, hey, I want to buy Neon token if they fall to a certain price, you could literally just, set that price range here, or, set that price range here, and then be like, I'll buy, for 100 wax, I'll buy Neon, open this position, and then if the price of Neon falls to this point, then bam, you're buying, like your position turns into Neon. You can close your liquidity pool, and you've effectively, limit bought Neon tokens. You couldn't have done that otherwise. So that's really, really cool too. Kind of a different strategy.
There are not fees to add to swap. The market cost,
There's
there's like a cost to add to market. Like tokens do not have markets unless you pay them like 800 wax or something. But the swap, anybody can add swap for any token, no fee.
Yeah. And then the other side is you're actually, if I'm using this to do this limit trade, for example, so let's imagine I create this position for 100 wax and the price of Neon token does fall to like the bottom of that range. I would end up with not just having bought 100 wax worth of Neon at a pretty much great average price between my range, but I would also have earned fees for doing it. So you can earn fees and get a better deal on limit orders. But again, they won't automatically close. You do need to come here and then close the position once it is, filled. And I do want to reiterate one last time, you can open for the same pool, like this Wax USDC, I can open 20 different positions. So I could create this range is very tight between the current price and 7.5 cents. I could open another one here from like 7 cents to 5 cents. I can open another one that's maybe on the other side where it's like, oh, if it climbs here, like sell my wax at these prices. So I could open one that's more wax, less USDC, and it's like from here to wax at 20 cents. I want to start selling out of it. So you can open a bunch of different positions to kind of balance how aggressive you want to be in your liquidity providing. Some of them can be extremely narrow and require you to adjust those more often. Some of them can be very wide and just let them ride. So really cool. I'm very excited for this.
That's hot.
I'm very, very excited. If you can't tell, this is one of the topics that I've been looking forward to talking about. It just has never really been relevant to us on Wax, and I'm so excited to see concentrated liquidity models coming online here. Like Alcor is really kind of leading the charge on driving DeFi innovation, I would say, onto Wax blockchain, and this is a huge step in the right direction. It's really, really
I had
cool.
no idea this was going to happen.
It's really cool, and the fee structure on Wax lets us create these positions, open, close, and understand and play with this stuff for fucking free. Stake a couple wax, have a bit of RAM. You doesn't cost anything, and this is really, really, really not intuitive necessarily, not super easy, but this is exactly how it works on every other Ethereum based blockchain when you're supplying complicated liquidity structures, so you can get your footing here for free. And I really am excited to try some more aggressive strategies that I just wouldn't try on Ethereum because I'm not trying to play ETH fees. But now, especially, I'm really, really looking forward to my TLM becoming unlocked. I think that happens on the 20th of this month. I unstaked my TLM. So I'm really looking forward to that because I'm going to be using that to do some more aggressive liquidity farming.
You talked about this earlier.
TLM is very...
Walter, he says, does this make you want to pull Neon from DeFi Box back to Alcor? And the issue with that is it's hard for us to measure who's holding how much of the liquidity pool with this new liquidity pool thing, because the way we measure our DeFi rewards is by who is holding the Wax Neon token, which is the combination of the two, and you no longer get that token for providing liquidity in this new system. So we don't know how to measure it on the blockchain, so not sure yet.
But I would love that because personally, I know it takes 2 DIM two dims from our collection to create one neon, and we've never sold any NFT for less than $1. So I would say the floor I would put for a range for neon would be like 40 cents. So then I could say 40 cents, and then I would say maybe to like $1 or $2 or something, because I don't expect neon to ever moon either. So then I could provide the liquidity that I have, which is I think on DeFi Box like 40% almost of the pool. If I provided all that same liquidity, but in the range between 40 cents and $2, it would make swapping neon for wax or wax for neon much more or much less like price impact, because it would act as if there's much more liquidity, because there effectively would be more liquidity available within the current price targets, and that is a huge, like, I would love to move to it, but again, we don't want to do that stuff willy-nilly and ask people to like uproot things that they've been used to, and we definitely want to make sure we can still reward the liquidity providers accordingly. I think Wapaka was saying that there is a way to do that and to call verify that stuff, and I know that there must be, because obviously I yield farm in V3 style liquidity pools for
We have to figure it out
protocol yield
first, so.
on Ethereum, but yeah, it's not
I would
super
say
straightforward.
Wapaka hasn't even figured out how these new liquidity pools work for Wax on Edge. Wapaka is the person who built our tool that gives out the rewards, so maybe once Wapaka figures that out, he can help us adjust our tool, but we don't know how to do that. Somebody else did it for us, so we would need that person to help us again. So
It would
not
be really
really
cool too,
in our skill set to be able to do that.
I would love it too, though, because then our like people who support the neon token and maybe who want some wax, what you could do is like pull your liquidity and then resupply more of the neon side and less of the wax. If you're like, oh, let me just take some of my wax liquidity back, and then just rebalance my liquidity pool. Personally, from my own wallets, I would keep my wax like as much 1-to-1 as I have it currently, just because that's the point of that position.
I consider my wax paired with my neon gone. Like that's a position I don't touch. That's for the community if they want to cash out. That's so like if I moved it over, I'd move it over with infinity range. But yeah, it's more like we literally don't know how to do the liquidity pool rewards right now on Alcor. So we'll consider moving it, but we got to figure that stuff out first. So I would say definitely maybe.
Nice. I love to hear that too. Yeah, the whole point of the neon token is also not to create like, pump and dump things or chase like weird things that make, that are flash in the pan. So if we do make moves with it, it has to be very deliberate. But absolutely, the V3 liquidity model is something that motivates me to, want to move that liquidity. I do think it's a very beneficial thing to do. But yeah, for now, it's not a plan, but it obviously I'm aware of it. But yeah, I don't want to get too much deeper into this stuff, but man, I love this topic, and we'll definitely be poking in on our V3 liquidity positions next week to take a look at how we've done, especially because these positions are not incentivized. This is pure yield farming. We're purely supplying liquidity to earn trading yield. That's it. So, capital efficiency is the name of the game, and being able to define your ranges. And if we are picking tight ranges each week, and we're correct in that the ranges that we choose are in range during the week, we should do quite well. So it'll be really fun to see and poke in on these every week as part of our investment strategy. Plus we'll be able to answer more and more questions as we get deeper and deeper into it on a weekly basis. That way this doesn't turn into like a lecture that you have to have understood everything that we just discussed. But yeah, the takeaway is I'm really excited with what's going on with Alcor.
Damn, that one was a whisper. I thought that one was going to hit.
Yeah, it was.
That was Joe Biden whispering, guess what? It grows the economy. I'll play it again.
Guess what? It grows the economy.
Another one I had is
benefits everybody.
I was trying to
It's
find
definitely like I used to farm battle miners tokens. I would 100% if I still had those pairs of tokens paired against each other, like the different minerals and battle miners, I would 1,000% put those into very targeted pools, because they trade really close to the same price. So it's like, why not? Like, I want my liquidity to be used for every single trade. So I'm going to put that, range like within 10% of each other or something like that. Really, really excited to see this coming out.
You see it?
That's one of my favorite sound bites.
The one I mentioned it at the head of our stream, and it might be relevant one more time, so I'm going to bring this up once more. There are other contracts out there that use V2 liquidity from Alcor. So if you are participating in Blvd, if you're participating in WaxDAO on the token farms, because there are token farms on WaxDAO where the way that you earn the token that you get has to have been a liquidity pool token from Alcor. Those contracts will have been broken by this update, and you won't be able to withdraw. So be aware that that's a thing. I'm not sure what the solution is on that, so obviously more on that next Tuesday when I get a little bit more of a heads up. I'm talking with a few of the people who deployed contracts like that, and hopefully there is a way for me to unbind my liquidity. But just be aware that if you get an error for like trying to withdraw your liquidity from something like Blvd, or trying to withdraw your liquidity from like a stake pool on WaxDAO, just know that it's not you. It's not you. You're not alone in that error. Like that's just it's been destroyed. Like you're not able to withdraw liquidity like this anymore because the liquidity is no longer represented by those tokens. So we'll see how that plays out. But yeah, I don't have the solution yet. I just want to let you know there is a problem, and it's good to be aware of it so you don't feel like you're alone, stuck in limbo or something. But
all right, I think that's going to wrap up our stream. I've needed to use the bathroom for a while now.
Yeah,
we have
thank
messages
you guys
on. I didn't see.
Yeah, thanks guys for joining. I really like talking about this stuff. So if this helped like you understand a little bit, I'm glad. And if there is as you mess with this shit in the future, if you get more questions, definitely reach out. It's not super intuitive, but it is really powerful. Really powerful stuff.
Our Discord bot, our Twitch bot randomly got friggin'.
Oh.
Every once in a while, it just turns itself off after a couple of. Let's see, CloudBot is disabled. Why the fuck would I want it disabled? I didn't ask for that.
Hell yeah, I didn't get that yield.
Now this should be good to go. There we go.
I actually think
I was trying to say, if anybody wants to learn more about this or go more in depth, feel free to join our Discord. Max is in there.
Yeah.
You might need to DM him. Sometimes he misses the general chat, but if you send him a DM, he should respond. If not, send us questions you have for next week in the Discord, and we will talk about them live next Tuesday. Once a week, we do our technical talk each Tuesday. On Thursday, we do more of a funny video, fun stuff, and then Friday, we do NFT gaming. We'll be playing big time on Friday. We're super into friggin' NFL Rivals right now, so if anybody wants to play NFL Rivals or learn more about that, hit us up in Discord.
Yeah, we're like top tier players. I think I was 56th in the last event.
I was ranked top 100 in both of the PvP events in the world. I unlocked an epic and a legendary NFT for doing that, and I have pretty great strategies on how to consistently do that. So
yeah,
I don't know. I feel like I'm probably one of the sweatiest players literally in the world. So if you'd like to share strategies or learn my strategies, all I want to do is talk about this stuff. So come talk to me in Discord.
Yeah. Those NFTs also, that rare one, the legendary one we got, I think the lowest listed is $190 right now. So
I wouldn't
I don't know the money. Flip. I guess I shouldn't pitch it as like a way to make money. The game is fun as hell.
Yeah. That's also like there's no way you can consistently be dropping 100 things worth $200 each every other week. Like the prices aren't going to hold if they keep dropping that much stuff. So I don't know. I'd play it for fun, and yeah, like my strategy is just to get the best team, which yes, that happens to be worth more money now, but like, yeah, I'm interested in building a good team. I'm not like trying to print money. It's a video game. Yeah. Don't think you can expect to reliably make money playing any video games unless you're a professional video gamer. But yeah. Anyway, we're gonna raid into Jungle Bry. Thanks so much for joining. We got another stream on Thursday, and if anyone wants to play big time on Friday, I'm also an ambassador. I can onboard you to big time. So again, just hit me up in Discord. But otherwise, thanks so much for watching, everybody. Thanks for NFT Gamer TV for rating into us. Thanks to y'all for listening to pretty complex topic here, and again, we'll have more. We'll dive more into this in the future weeks. So if you missed the beginning of the stream, we did a pretty in-depth talk about this for over an hour. So you can watch back the video on demand. But if you're still confused, which is totally fair, this stuff is really complex. We'll continue to talk about this for in the future weeks, because this is a big addition to Wax DeFi and totally changes how you can participate in Wax DeFi, and that's what we talk about each Tuesday. So now this has become kind of a staple of our show.
Today was a big overview, but we'll be a little bit more specific as we're using these tools more and more in the future. We'll dive into the specifics of what we're doing. It's great, and congrats on winning your Super Bowl, yo. I think I won 2 so far, and then I lost. I made it to 3. I lost one of them. I was too tired. Oh wait.
I'm doing an infinity mirror. Now I'm raiding in a jungle pry.
That's popping up.
Trying to think if we had anything else going on. We got stickers coming out, probably not this week, but next week. But we'll have our next sticker drop soon.
Yeah, they should be here soon. I'm excited to see these. They're also a different size again, nice and big.
Yeah, we made them the size of playing cards.
I'm excited for these. Also,
the other thing, what was I going to mention? I just forgot what I was about to fucking say. Oh yeah, set bonuses. Our set bonuses go out 1 month from yesterday.
Yes.
So you have 1 month to trade around Blockchain Boulevard sets if you're collecting our digital collectibles, the NFTs. The set bonuses go out on June 1st, or at least the snapshot for it. So in our Discord, we have a trading channel. You can hit that up as well. But we'll see y'all later. Thanks so much for joining. Peace all.
Oh yeah. See you. Thanks for joining us for sure. That was super.